Good evening, Nick Inman from VolumeProfileTrader.com on Tuesday, July 10th, and the S&P kind of rolling over here, doing what you should expect, which is, high volume area that has formed. The top of it, we're being rejected from those levels. The bottom of it, this 1300 level, that's support on this bigger time frame. But we can look into a smaller time frame to see what's going on and to give us some clues on some levels to trade off of. So let's do just that. Bring over the S&P here, and I'm not going to do that, but I am going to zoom into this most recent price action. And from, let's see, last month, this high volume area, which should have acted as support. What we did at it was price, we had the big gap up, we moved higher, and against this high volume area here, basically, the exact highs, and we rolled over, and the jobs number came out, and we gapped lower. Today, let me actually finish that thought. We gapped lower, pierced this high volume area, which is something that I didn't want to see, but we did come back down to this low that was put in on that Friday when the news came out. And we traded in that range, but most of the time was spent under it. And then today we gapped up above it, only to close within that range and sell off. And I think that was a great sell signal. That was a great opportunity to increase your short position. It happened to do just that and flush lower. So this is now resistance. I wouldn't put too much emphasis into that level anymore, other than a potential selling opportunity. What I'm really looking at is the bottom of this, the top of this high volume area here. We'll just look at it at the 1328 level. We basically came down to those levels today. 1330.50 was the low. But I would expect, one, if the buyers want to hold this market, now's not a bad opportunity, but really 1320 down to 1306 or so, we have the point of control for last month. That is the biggest part of the high volume area. It would also close the gap, and that's what That's what I'm looking for on the S&P. So what should have been happening in your portfolio is you should have been getting stopped out of some longs, hopefully for some profits, because we were buying down at these lows here both days, and we were rewarded. And then I was talking about hedging your position, and that ended up being the right thing to do. Now my short SPY is my biggest profitable position right now in terms of trades. So that's a good thing. That's what you want to see. That means you're in sync with the market. Apple, I remember saying, watch this value area low for last month, watch the point of control for both, June and May. Ends up being great support every time it came down to it, every time you got a valid buy signal, and then you were eventually rewarded with a breakout, and then it broke out, touches this high volume area, trades straight to the top of it. I'm going to zoom in so you can see it. Trades straight to the top of this high volume area. This is where I said you want to be ringing the register on some. Here it comes back down to the bottom of this high volume area. This is where I re-entered the other half of the position that I sold, and sure enough, we got a nice move to the upside where I rang most of my profits in. I believe it was above 617, but I can't say that for sure. I know I took some more profits down when it broke below 609. So now I just have a small placeholder position in Apple, which I'm okay with, and that's just the way I'm treating it. I had a position in DirecTV, which I scaled out of most, just have a small placeholder position, and just kind of waiting and seeing. But this was a position that I had on at much lower levels, so it ended up being a nice trade. Chevron, I remember this was an entry that we made somewhere in the 98, 99 range down at these lows. I told you to take some off at the point of control for the month. That ended up being, too early, but, that's why you don't take the whole position off. You trail your stop, look at the average true range stop. It breaks down, so you should have been stopped out somewhere around at 105. Not a bad trade for a short period of time. Pat yourself on the back if you caught that one. Caterpillar, we caught this at the lows, traded it up to the point of control level, got as high as the top of this high volume area. I took most of my profits at the point of control level, and then once we gapped down below, I flattened out and ended up, with a pretty good position or trade. Deere was another one. I forget the price on Deere, but I'm sure it was somewhere around this 76 level, somewhere around there, maybe a little bit higher, but similar move to the upside, and then you get stopped out. What's tough is, and let me show you on a daily chart. A name like Freeport, I just missed the trade here. I was looking for, potential shorts, and I just couldn't find anything really, and which is a little bit of a bummer because, at the top of this range where it was right to sell back here, it was once again right to be a seller, and I missed the trade, which, is kind of frustrating. You had valid entries up here against prior resistance, and the trade's now working out nicely. But I missed it, but that's okay. Bank of America had a short on here, another one that I just took off too early, which is a little frustrating. The only thing that bothered me was the light volume here, so I didn't want to overstay my welcome. I didn't want it to pop in my face, so I took the trade off, and it's continued to drift lower. That's like the XLF value area high for the year. It's a little bit of resistance. Should see a pullback really in the entire market. So I think that's the main thing, is you should see some continuation to the downside. Gold, that's something you hedged up against. Looking at last month's high volume area here, point of control, this is where you want to be hedging your position just in case it does exactly what it's doing now. And that's something that you want to be aware of. Let's look at another one, oil. This has been actually pretty volatile, but it's failing against, it made contract highs on Tuesday, failed against them on Thursday, gaps down on, Friday, down into this high volume area. It was support for a little bit, tried to hold it again, and now we flush down into it. The point of control for the month showing a little bit of a bounce, but nothing too crazy right now. It's just a little bit after hours. It is trading back up into the 84.20 level or so. So I mean, a small bounce, but nothing to write home about. JP Morgan holding the point of control for the year, light volume, so I wouldn't put too much emphasis into this. But I would just stay away, but I'm just pointing it out. I just want to look up Exxon. Exxon's failing against its point of control for the year. Probably something to take note of. Here we are coming into last month's high volume area. It should be good for some type of a small bounce, but maybe it's something that you look to sell into if you get that opportunity. Okay, well, let's look at the euro. Excuse me, the euro coming down new lows today. You know, that's what you kind of expect with the euro, right? Which means the dollar should be pretty close to new highs, and that is the case. Let's show the monthlies for the dollar. Remember, 2 months ago, point of control, look at that. We held it twice. Both times got entries, and then we gapped up above this point of control for June in July, and now it has held as support. Maybe it goes on to move higher. Notice the light volume on the buy side that we have seen, though. Maybe we're overdue for some type of bounce in the market. The main thing I would be looking at is this high volume area. How is price going to react against this high volume area? But really, I'm looking at 1320. I would really suspect the market gets down to those levels, and then you see some type of opportunity to the long side. But right now, you stick with your shorts. That should be your dominant position in your portfolio. And the way you figure that out is the trailing stops that you use should stop you out of your longs. So worst case scenario is you're holding small placeholder positions for the long side. For example, Apple. It's okay to hold a small placeholder position, but as of right here, right now, it's not right to be long the market in terms of big position. It's okay to have some exposure to the long side. However, the short side is where the money's being made right now, and that's you have to be aware of that, and you have to take advantage of that. So really, that's all I have to say. Let the high volume areas and the single prints dictate what you should be doing in the market, how you should be hedging. And that's the main thing, is when the market's range bound like this and we're not in a distinct trend, use those high volume areas as levels to hedge up against. And you'll find yourself, much more relaxed because you're hedged from certain levels, whether it be long or short, and you're putting yourself in a position to be successful. So take care, have a good night, and I'll talk to you tomorrow.